I'm Danica Tormohlen with Trade Show News Network, and I am joined today by
Florent Jarry.
we're here to talk about the Stax ranking that came out earlier this month. And I've interviewed Florent before, and I really wanted to talk to him again today since the ranking just came out. I've been seeing some LinkedIn posts about it from the different companies. I interviewed Greg Hitchen with Terrapin, and his company just joined the list at number 20 for the first time this year. So, Florent, tell us a little bit about the ranking and how you put it together.
Yeah, the ranking came about 7 years ago or so because we had some frustration ourselves from other rankings which we felt mixed apples and pears, i.e. looking at different business models and working with private equity who have been investing in the industry but focused on organizers with pure exhibition organizing activities. Again, they were wanting something which was a bit more specific around that business model. So we decided to build the ranking. So I think the specifics about the ranking compared to others is that we look only at exhibition organizing revenues. And so by that, we mean that we strip out venue rental revenues, the stand building revenues, standalone media or online media revenues as well from the numbers that are published. And we also check and verify all our rework numbers with all the organizers to ensure that we have a solid base to be publishing the ranking. So it serves a slightly different purpose to really focuses on comparing what is comparable, i.e. the size of exhibition organizing revenues.
How do get that data and put it together in terms of private companies, for instance, like a Terrapin? Obviously, it's not as difficult to get revenues from like Informa and RX, which are public, but tell us how you go about putting together those numbers for the privately held companies.
Yes, well, the different sources, and even for those who publish data, we never take what is published for granted. So even you say Informa, for example, the number we use is not just purely Informa markets. We'll be adding other revenues there, which correspond to exhibition organizing revenues that actually sits elsewhere across the organization, but is not reported in in that way. Similarly for GL events, for example, and for Reed and for others. I think for private companies, well, in an ideal case, we get the data from the company itself and they share it with us. Some under the understanding that we don't publish it, which is why we share a chart as opposed to specific numbers there. Others, they're happy for us to make our own estimates, which we share with them to ensure that they're very close to what is reality. And then we get the green light from them as well.
Thank you for sharing some insight into how you put that together and, the value of those numbers. How we can, trust that data that you put
Well,
together.
this top 20 has become something quite important over the years, so a little bit to our surprise. And I have a few examples to give. You just mentioned Terrapin, who just entered a top 20. So I messaged Greg about that. He was extremely happy with it and has been communicating about that. Similarly with Hive, which has been communicating about how they've been climbing the rankings very quickly. I know Easy Fares, when they entered, they made it a board agenda item. And I remember very well being in Germany. I won't tell the name of the organizer, but in the corporate development office, the ranking was on the wall there with a big circle around it with an arrow going up saying we need to climb this ranking. So it's quite interesting to see that it has had its impact.
One thing that you pointed out in the release was the fact that the exhibition industry has grown 20% beyond pre-pandemic levels. So, can you give us some flavor or some specific factors that you think have driven this recovery and, some of the growth and whether some of these growth drivers are sustainable through, looking ahead to 2026?
I think so. The first thing is that 20% figure really relates to the top 20 in aggregate as opposed to the broader industry. And as you'd expect, that top 20 sort of include the outperformers compared to the rest of the market. So the market itself has recovered from COVID numbers in 23, roughly. That's what Globex tells us. And in 24, we'll have seen further growth there. For the growth drivers for the top 20 players really are a combination of, a number of factors. In no particular order, I think portfolio management is one, i.e. quietly shutting down shows or not reviving them post-COVID to really focus on the better assets and the faster growing ones, for example. There's been an acceleration of launches and new formats by the top players as well since COVID. There's been a pricing impact with inflation coming into pricing, but also beyond inflation, there's been a bit of a pricing catch up and clever pricing by a number of players. And then, of course, a big component of that growth is M&A. And there's been continuing focus by some of these players in acquiring new positions and new events or portfolios, in existing geographies and verticals, or expanding into new ones. So I think that looking ahead, that will continue, and both those organic levers, with maybe a less so on pricing, but launches, the development of events that have been launched fairly recently, so them climbing the development curve, pricing less so, but the M&A will be continuing strongly over the next few years. We have no doubt that will be continued. From a broader industry perspective, there's likely still volume recovery to be had because the industry still is not selling the same amount of square meters as it was prior to COVID. And that will be driven, in parts by emerging markets. I'm thinking Southeast Asia, for example. Middle East is growing very strongly as well. So despite macro environment headwinds and geopolitical headwinds that will continue, we expect the market to continue growing at a slower pace, certainly more of a pre-COVID pace of GDP plus 1 or 2%.
One of the things that you highlighted was the reshaped competitive hierarchy between the institutional and the non-institutional organizers. You want to elaborate on the fundamental differences in business models that have led to those non-institutional organizers growing 30% since 2019, while those institutional organizers have remained flat? That was one call out.
Yeah, so I think those numbers are correct in aggregate. And of course, as any aggregate or average, it hides, considerable differences in each cohort, of course. But on aggregate, you're right. I think for many publicly held or PE held organizers, we saw underlying belief by their shareholders of the in-person format that would live beyond COVID. And so there was fresh financing to weather the COVID period, but also to help grow coming out of COVID. This has led to portfolios being reworked and pruned and reshaped and really focused on in 21, 22, 23, but also the free resource there not being allocated to shows which are discontinued, be allocated to launching new events, and we saw an acceleration of launches. And then that investment money was put into acquisitions, whether continuing of sort of small portfolio or individual show acquisitions or bigger acquisitions, of course. So if you look at overall, I think probably half of that growth has been driven and the other half organic driven. Another thing to note as well is that across that period, the renewed focus on efficient management of portfolios has led overall to improved profitability of all these players. For many of them in these sort of low percent of EBITDA and aiming to continue that improvement. Now, institutional organizers have also been supported by their shareholders as well, but probably with more of a focus on the sort of hometown and possibly more of a focus on preserving all events as opposed to reshaping the portfolio. So we've seen fewer instances of that refocus and fewer instances of resources being redirected to launches and new developments there. And also, there's been no real example of big money being made available to these institutional organizers to go and acquire big elsewhere. So we see continued slow development there with partnerships or one-show acquisitions by some of the German Messen, for example, or some of the Italian players, but nothing like in the same volumes and the same size as the publicly held or PE-owned organizers.
Informa is top on that list, right? And has been for a little while. And it's full disclosure, the company that I work for. But it achieved record-breaking revenues, especially with the acquisition of Essential, which Money 2020 can lie in. How has consolidation affected the competitive landscape, and do you anticipate more going forward?
Yes, well, let's remember that the industry remains very fragmented. So that is still very much the case. And so if you take Globex numbers, which puts the market size at, say, $36 billion in 2024, effectively the top 10 is around 20% of the market. And then the sizes drop down very quickly. So this is an industry which is by nature very acquisitive, low barriers to entry, lots of entrepreneurs in the industry, and large organizers have historically focused on buying smaller events or portfolios, professionalizing them, and then scaling them rather than launch. So I think that will remain, how the industry works. I think one factor that contributes to that is the way that enterprises are valued as well. And so smaller scale has an impact on valuation of a company. So that also supports the financial engineering around acquisition by the large organizers. So I think M&A will continue amongst by the top 20 organizers, definitely, and may well have further consolidation amongst the top 20. Some of the organizers there are coming to the end of their hold period by private equity. Think Clarion, of course, which had a failed process earlier this year, or an ongoing process, maybe I should say. Closer still to be coming to market. Hive should be coming to market. There's ongoing speculation around what might happen to Emerald, for example, or to Terrapin, or to Car Exposium. So no doubt we will see continued change. So let's see what next year has to say. But obviously, when there is consolidation, for example, Essential disappeared from the ranking. Now with Emerald, that leaves space for others in the ranking.
That's so interesting. I'm so glad that you pointed that out. So the top 10 organizers own 20% of the market, but it leaves that 80% fragmented.
So that's correct. And I think that the size of the organizers drops down very quickly after the top 10, after the top 5. And then, as you know, there's a very large number of, very small, one show organizers.
Right.
Or just a handful of show organizers. But some are extremely successful. Some have, great events. And of course, they feed the acquisition pipeline and will continue to do so.
Yeah. Well, and especially here in the US, the fragmentation, a lot of association shows that do one-offs or a handful of shows.
That's correct. And then the US has a different structure to many other countries, in as much as the weight of the associations is very, very strong. So that limits, in a way, the pool of potential acquisitions for the diners. So fewer dinners for the diners, if I can say. But it's such a huge market, of course, the biggest market by far, that in volume terms, there's still a lot of entrepreneurial organizers out there which are doing great jobs and which are growing themselves and buying smaller ones, or which are becoming dinners. It's not pejorative, joining bigger groups.
There's always new industries and new things that are popping up in terms of technology and new industry sectors that make the exhibitions industry so interesting, right?
Yes, I mean it's a fantastic industry, exhibitions, because it covers every single other industry out there. And in fact, it covers itself, because you've got, shows for show organizers. So it's fantastic from that perspective. So as the economy evolves, of course, lots of new reasons to create new events.
I want to talk about the 3 new companies that joined the top 20 this year: IEG, IF, EMA, and Terrapin. What specific strategies, when you're looking from the outside, at least have these organizations implemented and that enabled them to break into this elite group?
Well, I think 2 reasons there. One, there's a mechanical reason, is that we excluded 3 Chinese organizers from the ranking, not only because we could not get comfortable with revenue numbers for them. So therefore, that is the main reason, and so they may come back one day. But also, there's also a logical reason, in as much as those are 3 organizers which are purely domestic, one in Hong Kong, two in mainland China, whereas all the others that we consider have international operations. So there's also, in a way, a logic to that. So I think the top 20 remains consistent, or remains representative of the industry, focusing on those international organizers. So why those 3 as opposed to others? That's a good question. I think the interesting point is that 3 different routes to success. So all 3 have had very strong growth since 2019, plus 30% to doubling revenues. I think IFEMA in Madrid, all organic. IEG in Italy, a bit of organic and some acquisitions as well. And then Terrapin, an aggressive launch machine, and supplemented by some acquisitions as well. So there's no single route to success. Certainly focusing on ensuring you've got, great events, which are in, very positive sectors, helps, but that is not but many organizers have that, but then focusing on those sectors helps with accelerating the growth profile.
The ranking also mentions that, for instance, DMG, Closer Still, and Terrapin doubled or even tripled revenue since 2019. What are some of those common elements? You mentioned organic growth as opposed to engines that other organizers might learn from. What are some of, organic growth is pretty broad, right? So maybe delve into a little bit of that.
Yes, and I think you probably have to consider different types of organizers, and each type has its own sort of typical recipe of operation and of growth. So if I make things very simple, on one end of the spectrum, you have more the historical model, which is a devolved organization around leading shows or these days show brands, where exhibition directors, group exhibition directors have strong autonomy to run their events and their strategies in the way they feel is the right one. So you could say DMG falls in that category mostly. And then at the other end of the spectrum, this side, you have more what we call the playbook players, centralized operations, similar approach to running an event and to launching an event, sort of KPI driven. And so it's a different way of operating. Closer Still or an Easy Fares, for example, belong very much in that category. And Terrapin is maybe sort of hybrids because they have a playbook approach in some places. Think that the solar portfolio, for example, which has taken over the world, but also brands which are run somewhat differently. I would say what probably unites them is a very clear focus on a small number of sectors which have strong tailwinds to them, and that enables them to go very deep into their sectors and therefore quite clearly be very successful.
The ranking in the release, it also talks about the fact that fixed venue operators will be more limited in their ability to capture growth. Um, what options do you see for these venue-tied institutional organizers to remain competitive? Some of the messes in this evolving landscape.
I think it probably depends what you mean by competitive. So if it's competitive within the top 20, we see no reason for them not to continue seeing their position eroded over time as other organizers have more and not more ambition, but the resources to go and focus on acquiring large portfolios or small portfolios as well as organic growth. So we expect that over time, the Messen and the other institutional organizers will, their position will erode. Now, if it's about being competitive in their own markets, that's a completely different question, of course. And then, they have great brands. In many cases, these are regional leaders or even global leaders. They know their markets very, very well, and they've been successful in coming back for many of them. I think the hindrance that they face is that investment remains focused on the success of their hometown as opposed to global success. Of course, some of these are very international, yes, but still, there's always this arbitrage in terms of resources, and that will always be to support the venue and the town and not only have a view on the size of the extent of the organizing activity.
I want to know from your perspective, how are successful exhibition organizers integrating digital components? Do factor, I know you said you strip that out, right? That digital revenue, but it is an important complement to the in-person event. So which companies on this list are leading that transformation?
So I think what we strip out are what we call standalone digital revenue. So if it's tied to a show, that goes in. If it's a standalone magazine, which is for example, that does not go in. I think all the leading players have really embraced digital, as if we call it that, in different ways. But there has been a clear recognition of the power of data to better understand your audience, your customers, or your exhibitors, your sponsors, your attendees, of course. And therefore, how do you capture that data and you leverage it to improve outcomes for all your participants? If we take a step back, it's quite interesting to note the evolution of thinking around digital. Let's take the past maybe 20 years. From in the early 2000s, the internet will kill trade shows. That didn't happen. And then in 2010, 15, it was, death by 1,000 cuts. A bit of online, a bit of new formats, a bit of this and that would kill. And then during COVID, of course, virtual shows, and the metaverse, remember that, will replace clunky in-person events. That didn't happen, and then it was all about hybrid. If you remember, the future will be hybrid. And guess what? None of that really has happened yet, perhaps, if I'm being cautious. Trade shows today, you go to many, they look very much like trade shows 10 years or 50 years ago. However, There's a however. I think there has been change, and very important change, but which is maybe a bit less visible to outside, viewers. So, of course, there's renewed importance around experiential and what that means for a trade show. But all the leading organizers have been spending much more time worrying about data and understanding their audience in a much better and deeper way. So this has led to myriads, data-enabled, digitally delivered, initiatives around sales, around go-to-market, around marketing, identifying, targeting, communicating to your audience, around lead generation and matchmaking, um, around content building and sharing. So there's been lots of initiatives and lots of real benefits there to data and digital. Of course, AI is the latest technology that has come in to accelerate a lot of that. But organizers have different approaches in terms of which ones they've been focusing on, whether it's back office focused or whether it's sort of market or customer focused, and how they think about the benefits of those, whether it's direct revenue generating benefits, i.e., I can therefore create a lead generation platform and and bill for it, versus no, I will through these digital tools be able to build better outcomes for my participants. And that just means I am freer to think about my pricing of my net square feet in a slightly different way or in a better way. So in an indirect way. So there's lots of different examples. We don't see any particular leader. I think all the top 20 players have, if I exclude the institutional ones for a moment, have been spending a lot of money and resources and time and effort in building that. Maybe in 5 years' time, there'll be an acceleration and then bifurcation of the industry within the top 20. Perhaps. I don't know. I think within the broader industry, yes, you've got those who get it and who are being very successful, and those who don't, who probably will continue living perhaps, but from a growth, from a quality of outcome, from a profitability perspective, likely will be losing out.
It'll be interesting to see now, you talked about the internet and virtual shows killing our industry. And now, of course, the latest is AI, right? Not necessarily a threat, but another big disruption in our industry.
Yes, and I think an enabler today is how very much it is seen. And interestingly, we attend a number of our investment committees on the private equity side, so financial sponsors, and AI is, of course, always a question that comes up, but less as a concern, more as a, how is this organizer using this? And then what are the benefits that we will be seeing in the short term and in the medium term, as opposed to, my goodness, this is yet another death threat to the industry.
Yeah, yeah. So that's the good news for sure. How it's playing out, it seems, yeah, TBD still in our
Yes,
in
yes, I
our
think for all
industry.
industries.
Yeah,
Yes.
yeah. One more question for you. Looking ahead, what geographic markets and industry sectors do you predict will drive the next wave of growth for exhibition organizers, and which companies are best positioned from your perspective to capitalize on these opportunities?
Well, I won't make any predictions, but I can tell you what we're seeing. What
Okay.
we're, I think what we've been seeing for a few years now, and will be continuing, is a renewed focus on the U.S. as a market. Many of the international organizers in the top 20 are, European. In fact, the vast majority, and some are big in the U.S. Of course, are RX and Informa historically, and a few others, but many are not, and realize that they are subscale and want to be serving this the biggest market on the planet. It's tough for many to be successful and scale in the US, but this remains on the agenda and very much a priority for many organizers, whether institutional or not. Geographically, again, I think the Middle East has been a hotbed of new shows and success stories by everyone, and remains lots of potential. Dubai, of course, is a bit, straitjacketed, from a volume perspective, but Saudi Arabia has become a new player on the field, and feels like every week we hear about new initiatives and new investment there, whether it's from German organizers or British organizers or homegrown organizers there. So we see continued growth there in the Gulf region as a bridge really between continents and as a great trading hub. And then further east, Southeast Asia remains, again, of interest. I think it's a series of fast-growing markets. Malaysia, Indonesia, Vietnam, Thailand, those are all countries where there is continued, and we will see continued investment over the medium term. I think what's interesting to note is what the regions which are not on the list I just gave you. So China, for example, we're seeing much more caution by international organizers about China. India remains a question mark and a tricky one for organizers to really tackle. So efforts there remain fairly minimal. And then Africa and Latin America are sort of mostly off the map in terms of geographic priorities for organizers. I'm not talking about Europe because it's homegrown, home patch for many of these organizers. From a sector perspective, I think anything with the word tech in it. Of course, we mentioned earlier that there was lots of new areas for exhibitions to go and tackle. And obviously, as the economy continues to digitize, there are new areas that pop up and existing shows evolve. You go to a agricultural machinery show, well, guess what? It's actually a tech show. So I think so that means that some of the incumbents see that and capture it, but there's also new players who come in and say, well, actually, their incumbent doesn't really do justice to this new wave of technology that is disrupting the industry. We will create a show for that and can become quite successful. Yeah, not breaking new ground, but I think that will be an area of lots new events there where the tech enablement or the tech disruption of the industry is a real driver. And then companies who will win, well, those who plug into that, who really have who can execute correctly. It's all nice saying we want to be in the US or we want to launch tech shows, but it's about the execution, and that is obviously much trickier. So those who can execute with the right resources will be those who win. I think if we speak again in 5 years' time, we'll see who will have won those 5 years.
Well, hopefully we'll talk every year for the next 5 years about the ranking, because you are so knowledgeable on this. It was fascinating to talk to you about the global perspective and really dive into your knowledge and experience in the exhibition industry from sitting, above and over at Stax and kind of analyzing it. So,
well, thank you. It's been a pleasure, and I look forward to our next conversation, probably in person.
yes, we'll see you at UFI Global Congress in Hong Kong. And thank you so much for
Definitely.
your time today. I really appreciate your perspective. For Trade Show News Network, I'm Danica Tormohlen.